Hello ladies and welcome back to Common Basic Things. My name is Cruz and today I'm going to show you guys how to make passive income. You know what I mean? But no, in all reality, in all seriousness, I am going to show you guys how to sell puts and sell calls, just more into detail and what it means really. So let's just get right into it, right? I'm not going to waste any of you guys' time. So in order to do this, first you do have to have it enabled. So you do have to go into account right over here or in your phone, wherever you're doing it at, right? But once you have that, right, you go into settings right over here and you go to options trading. You go to options trading, you have to have it enabled. Now if you only have it to level 1 or level 2, you're gonna to have spreads. I can go more into detail later, but to have spreads you're gonna have a level 3. But once you have that all enabled, what you're gonna want to do is you're gonna go like to a stock that you feel comfortable with. For example, Apple. I love Apple. Apple, great, especially with their new iPhone coming out. It's great hype. I like the concept. Mag strip, it's great. But yeah. So now what this means is, right, so when you have options trading, you're gonna see that option, that little button that I clicked before this. But once you're in here, right, people usually tend to start, if you want to already buy the stock, you're gonna just want to buy an option instead. So what this means is, right, if you're selling a put, this is the expiration date, the strike price, the share price, and the premiums, right? Okay, keep that in mind, guys. The Greeks also a very important thing, depending on how long you're keeping it, how much it depreciates in value per dollar, if it drops or increases. So yeah, that's also a thing I can go over into if you want me to, guys. But what this means is, right, so if you're selling a put, that's what you want to start with. Let's do it next week. All right, so if you're selling a put for next week, the strike price, you're gonna have to have this times 100, because the contract is 100 times the strike. So 11,600, right? So you're gonna put that money down as collateral, but you're gonna be receiving this premium of $136, right? So what does this mean? Well, if the share price drops below the 116, you're gonna be forced to buy this at. If it even drops below that, you're still gonna be forced, like, you're still gonna have to buy it at that strike price, because they're most likely gonna, force to execute. Usually they always tend to, if the share price is below the strike price. But yeah, but you're still gonna be keeping that premium. So don't worry. This is what I mean by selling puts and calls, the wheel strategy. This goes all into effect right now. And what does this mean? So once you own the share, right, and you have to execute it, or if you don't, the most scenarios, if you want to be safer, you can go more out of the money, where it's unrealistic to drop that much in so a short amount of time. But I mean, if you feel like it's gonna go up, these tend to depreciate in value, so the higher it goes, you could potentially buy it back, since you're selling it at a cheaper price, and just secure the profit. Or if you don't feel like it's gonna drop, below that, you can just wait until it expires, worthless, and you keep that premium, you get the collateral back, and that's it. Pretty sweet deal right there. But let's say, for example, you did have to buy it. Well, what does this mean? Well, if you bought it, well, what you're gonna want to do is sell. And what are you gonna sell? A call. You sell a call. What does this mean, guys? All right, let's say you bought it at 116 next week, and then you go to the week after, and you want to sell it back. Well, look, the further you go out, the higher the premiums are, the more intrinsic value it has. But it depreciates after time. So what does this mean? Well, if you go over here, like, as you can see, guys, on October the 30th, let's say I bought it for 119. Let's say, I was cocky, but I had to buy it, and now it's at 117 or whatever. Well, I could go right over here, and as you can see, I could sell it for 121 and just choose further out of date and just get a better premium. But it just have to be sitting longer, basically. But if you choose it on a good stock, usually the premiums are always pretty sweet, and you don't even have to do it on this. Don't get me wrong, guys. Don't think you have to start with this big amount of money. Like I said, I can go more into detail onto selling calls and buying calls and buying puts. But like, for example, one of my favorite ones, TNA. It's a small cap. Oops, I'm sorry. It's a small US companies. And so far it's been doing pretty good, like, as you can see right here. Over the year it was at a 73, but before the Rona, it did drop all the way to the lowest of 11, and now look at it right now, rising at 38, higher and going higher. But like I said, just keep in mind that this is $38 per share. So go into trade options, you can see. And what does this mean? All right, you sell a put. All right, next week. All right, look at this, $3,700, $128. As long as that share price, like I said, doesn't drop below that, and you have to be comfortable with a company you're gonna want to own anyways. But as you can see, it's a street premium that you'd be getting, as long as you put that money as collateral. And if you did have to buy it, well, you can go back and sell a call with it, as you can see right over here, guys. It's no brainer. This is a more secure way of getting the bag, securing that money, you know what I mean? All right, but yeah, 37, 38, let's say you sell it at 38 strike price. Well, you're $1 up from what you bought it at, and you're going to be getting that premium if that share price goes above it. What does that mean, guys? You're getting free money, come on. Now that is a way, that is the wheel cycle, wheel strategy, however you want to say it, different ways people say it. But you just go and sell a put, and then you go back and to sell a call. Now there's different things you can do here when you have options trading enabled. You can do spreads, but you have to have a level 3 account. You can buy calls and buy puts. What does this mean? Well, when you buy a call, I'm not sure if you already know, but that means you're gonna be thinking the share price is gonna go higher, and the premium that the contract is worth is gonna go higher. It's gonna gain more attraction, more value over the price going up. And you could sell it, or you could execute. You could buy it at that strike price that the contract was at, and you could if it's even going higher, you could keep riding it, of course. If you don't want, if it's going past the 23rd, or if you want to sell it before that, you can sell the contract. You don't have to execute. You don't have to buy the share. You could sell just the contract. But the closer it gets to it, the more it loses value, especially if the share price is closer to that strike price. They're pretty close, it loses value. So keep that in mind, guys, okay? Also, when you're buying a put, you're thinking what? You're thinking that the share price is going to go down, that it's going to crash. Now these, you can day trade them too, but it's more complicated because you have to be careful. You could lose money very quick, especially since they depreciate in value. But the good thing about buying calls and puts is that you're just putting that money as collateral. There's, as that money. Once you buy that, if you lose it, you lose it, but nothing more. That is the good thing about that, but depending on how many you buy. Now the bad thing about one bad thing is like credit spreads or debit spreads, anything spreads really, because you're just putting that money in the air. There's different things. I can go more into detail, guys. If you want me to make more videos, I will try and keep you guys updated. I have been kind of busy, just doing me, but yeah, so far it's been all right. Nothing too bad over in that account. I've been trying to grind, trying to get it back up, and now that's all I have again for you guys today. Thanks for watching. If you have any questions or anything, please comment down in the comments below. Anything I'm doing wrong, anything you have suggestions in me doing better. Like spreads are very risky, so I wouldn't suggest doing them, but that is what I've been doing. But yeah, any comments, questions, just comment them down below. But yeah, good day, guys.